Hey folks, Dan Frio here, the Mortgage Update. It is March 16th, 2020. So what happened today? Well, kind of what I thought is we had a huge run in the market. This number is phenomenal. And again, I keep saying this. These are numbers I've never seen in my 32 years of doing this. So let's unpack what's going on. I've got inundated and I tried to put a video together today on my whiteboard, and I promise you I'll try my best tomorrow to do this, to explain several things. The Federal Reserve and what they control, and mortgage rates. Let's just break it down to those two items. I'm going to try to unpack it again right here, but I'll put it on a board tomorrow to kind of go in more in depth on what's going on. Okay, so let's get to it. What happened today? Well, the stock market dropped 3,000 points. That's terrible. And I don't know when this bleeding's going to stop. The Fed coming in and making money cheaper, I mean, it isn't going to help people from getting sick, people from being quarantined. If you're quarantined, you're not out buying things. So people are hoarding everything right now, which is depleting supplies. Demand is going to be here soon at zero because nobody can really do much anything. So everything's going to come to a halt. So it doesn't matter how cheap you can get credit, you're really not going to buy anything. I know here in Chicago, they shut down bars and restaurants and schools. And so what do? I mean, basically you go to work if you can go to work, or you work out of your house and you just hang tight. You eat, watch some TV, and that's about it. So, I don't see demand going up for anything. So I really don't see the stock market doing anything until we have some good news on the front of this thing being over with. And, and then we'll start to come back to normalcy. And that could take a year or so. Some of the analysts come out today and said, this thing could linger through July or August, but then it's not going to be like, bam, it's over with and everything just goes back to normal. It's going to take, time to build up inventories, time to do everything to businesses to get back to earnings and everything else. So, that's what happened today in the stock market. Basically, again, I don't see anything. At some point, I don't see it continually going down because stocks have some yields and everything else. But I don't know where the stock market's going. So I hate to say it that way, but if you're a wealth planner or a stockbroker says, "Oh, here's what's going to happen," hang up, because they don't have a clue what we don't know what tomorrow's going to. So now let me address the issue of the Federal Reserve cutting rates to zero. Okay, I'm going to make it as simple as I can. When a particular bank needs money overnight to satisfy reserve requirements, they go to another bank and they get that money overnight to meet the requirements. That's the federal funds rate. It's interbank lending. So if a bank needs money from another bank, that's the rate of return or the yield that they have to pay for that money. Period. That's the federal funds rate. It's got nothing to do with mortgages. There's a nice little chart that I have right here. Here's what happens with the federal funds rate over the last, basically since they've been recording everything. You see it, it's bouncing around, it's bouncing around, it's bouncing around. It normally has some flow in it with what's going on with mortgage rates. But you can see, basically in 2010 to 2015, we were at zero. Well, mortgage rates never hit zero. They were about 3.5%. So once again, the federal funds rate was going up because the economy was getting better and better and better and better. And then all of a sudden we have this issue and we're back to zero again. It's not the first time we've been there. Okay, so this is the federal funds rate. This is it. It can be zero. And over time, look, again, mortgage rates at that time, they were not zero. They were in the mid to low threes. Okay, they ranged from 3 to 5%. So that's that part of it. Okay, so what the Federal Reserve is doing is they're coming in and they're doing another quantitative easing. So during that time frame of like that we showed through here, what they were doing is they were buying mortgage-backed securities, the bond, to artificially keep rates low. Okay, so that's what happened during that time. But what happens is many times people refinance or sell the house or whatever, and that money gets kicked back to the Federal Reserve. Well, they normally take that money and they reinvest it and buy even more mortgage-backed securities. Well, the problem what was happening is as of last September, they stopped doing that. They would just pocket that money. Okay? Well, just over the weekend, they came back and said, we're not only going to start buying $200 billion of mortgage-backed securities to stabilize the market and bring rates back down, we're going to start every time a house pays off, refinances, or does anything, we're going to reinvest that money back in to make sure that rates stay as low as they possibly can. So that's that part of it. Mortgage-backed securities, that is what controls mortgage rates. Okay, they'll never go to zero. Okay, because there's a cost factor involved for us doing business, and normally there's about a 1 to 1.5%. We need a 1 or 1.5% yield on the money to even break even. Okay, so mortgage rates aren't going to be zero. You have to have somebody that takes care of the payments, that calls you when you're late, that processes your payments, and everything of that sort. So mortgage rates will not be zero. Okay, so I monitor them on a daily basis to try to get you the lowest rate I possibly can. But just so you know, the federal funds rate can be zero. That's interbank lending overnight, very short term. And then there's mortgage rates, and then your car loans and everything else. Okay, so that's basically how mortgage rates are created. So let's go and see what happened today. The Fed jumped in and really eased the market. They said, we're going to jump in and make sure that we have enough, we build up a great demand for these bonds. So how to get to equilibrium on any price of anything is you have supply and demand. As let's say the supply is stagnant, okay? As the demand goes up, the price goes up. Thus, and if you watch my channel, as the price goes up, the yield or the rate of return goes down. So the Fed's saying, okay, we have an infinite number of mortgage-backed securities. Here's it, and it's going to be basically a constant number. And we're going to bid it up so our demand is huge, thus pushing up the price and the yields down. I hope that in its simplest terms, that's what's happening. So they're saying the demand is stable, and or the supply is stable, and now the demand, we are increasing the demand for that product. Okay, so that's what's happening. So let's look at the chart. Look at this. I thought we were going to be back in this range, and I said, you know, this is the spot where you can see a line right here. Let's follow that across. That's kind of a new, I'll say that's our new bumper. Look right here. We started the day, the MBSs were up over 200 points. Then they dropped all the way back down. And then as the day progressed, they continued to move up. Again, up is good. As this is the price. As the price of this bond goes up, mortgage rates go down. Okay? So that's what's happening with mortgage rates. So are we going to get back in this range? I don't know. I'm thinking we might, because the Fed is coming in and they're making extraordinary measures to try to keep this, you know, rates down as low as they can, because that's going to free up monies for people when things do take off again. It's going to really help, you know, everybody out in the housing industry and the housing market. So right now, I'm not going to go over, you know, there was some economic news that came out today, and I think it's down here, Empire Manufacturing numbers and everything. They were crushed. I mean, there was expected to be 4.8%. It was minus 21%. So we all know everything is terrible. So let's not dwell on that. Let's not dwell on the stock market. I just want you to know what's going on with mortgage rates. Grab this opportunity. Also, when the bottom of the market, stock market hits, if you see it start going up in multiple days, 3, 4, 5, 6 days in a row, and the virus is starting to ease, jump in. Don't be a hog. And I'll get back to my pigs get fat, hogs get slaughtered. You're not going to ever time anything ultimately. You know, getting the lowest interest rate ever in history, buying that stock at the lowest price that's ever been posted. That's virtually impossible to do. But, you know, be careful on what you do. I I can tell you, I think there was like 23 people today asking me, about what's going on with rates and how to monitor rates and everything. Like I said, I locked in everybody here. We were blessed that we locked everybody at the lowest rates in history. I had about $16 million worth of loans from clients. We locked everybody. So here, let me explain this too. We locked people here. Okay, so rates got a lot worse. Right here, we were locking people under 3%. So let's say it's 2.9% on a 30-year fixed. By the end of last week, the rates were like 3.75, 3.875, 3.9. Okay, even though rates got better, we're not at this point here. So I have a lot of clients, and I don't blame you for asking this. They're saying, Dan, how's this affecting me? We still beat the market. We still beat anybody. If you got a quote today, nobody's going to beat what you have. So is it going to come back for those clients that we didn't lock because we weren't prepared or you weren't prepared? It got a lot better. I told many, many, many people this right through here. I'm like, hold on. Give it a day. Give it 3 days. Give it a week. We're going to be back in this range. And we're getting there. Another thing that's happening is there's a lot of banks turning you away. So if you call a bank and it's 120 days, it's 3, 4, 5 months to close on a loan, or they might just say, you know what, we're not taking any new applications. Call me. I'm taking them. We're working 7 days a week. Even if we're quarantined, everybody on my staff, we have all of our computers at home. We're all internet bound. We're a very tech savvy company. We can all work remotely and basically, will things get a little bit harder on our part? Yes. Because, at the office, we're all sitting there all together in one big building and we can jump and, help people and do this. Here, it's a little bit difficult. Okay, so let's say we can usually close your loan in 2 to 3 weeks. That might be 3 to 4 weeks. It is not going to be 3 to 4 months, and we're not going to turn you away. Okay, so what I'm going to ask people to do is, if you have a mortgage statement, I already got 4 this evening. I just had dinner, and then I figured I would post this because I wanted to get a little more in depth. I've already had people sending me their mortgage statements. Most people are still in the 4 or higher range, between 4 and 5%. Rates are probably going to be in the low to mid 3s. So say 3.3. So if you're 4.5, 3.3 is awesome. The average loan we're doing right now is about $300,000. You're going to save probably $300-400 a month. Or let's reduce your term and say, you know what, you've been in the house 25 or 5 years so you have 25 years left. Let's put you on a 20-year mortgage. Keep the payment the same. Save that 5 years or 60 payments of $2,000 a month. It's $120,000 you're going to save. It's a lot of money. So, again, don't get all frustrated saying, oh man, I missed out on this. You still have among the lowest rates ever in history. So what do we cover? What the Federal Reserve does and what they control. It's federal funds rate by interbank lending. It has nothing to do with mortgages. Mortgages are controlled by the mortgage-backed securities market. The Fed has stepped in. They're buying $200 billion worth of mortgage-backed securities to drive up the demand for those products. As people are refinancing and selling their homes, they're going to take that money that they get from the refinance or the sale of that mortgage, because the mortgage paid off, they're going to roll that money back in. So they're going to even do more than $200 billion worth of buying of mortgage-backed securities. That will keep rates low. Okay, so that's that part of it. Mortgage rates aren't going to be zero. They will never be zero because the banks need to make a margin, even a cost margin on this stuff. All right, so that's that piece of the puzzle. The stock market, I'm not going to focus on that in probably the next week or two because you can watch that and cringe just like I do. Economic forecasts, I'm not watching those either because they're irrelevant at this point. We're going to watch the coronavirus, how this subsides through the economy, the markets, and the time framing of it. Once it starts to die down, you're going to see things start to move. But this is going to push us into a recession. That's basically a given. So utilize bad times to help you. Capitalize on it some way. There's always a silver lining in something. The silver lining is here, the biggest debt that you have in your life. I hate to put it that way. You're going to be able to capitalize and get the darndest lowest rates ever in history and take advantage of it. So that's what a financial responsible person would do. So let me tell you a little bit about myself. For those that are new to the channel, my name is Dan Frio. I do the mortgage update every day. You can hear me if you're in the Chicagoland area. I am on WYLL Radio Monday through Friday from 7:30 to 8 p.m. The Mortgage Update with Dan Frio. I am also on WIND Radio. It's one of the largest talk radio stations in Chicagoland area. Saturday mornings from 7 to 8 a.m. That show is now being called America's Wake Up Call with Dan Frio. We talk to congressmen, accountants, wealth planners, all kind of people to teach you. Like last week we had an insurance person on there. I'm like, what is a deductible? What is a PPO? What is an HMO? Trying to educate you on things just to make you a more informed consumer. Hopefully you use me. I'm a mortgage advisor. I have been doing it for 32 years. I'm in Chicagoland area, but I basically do, I think, 48 states now that I can help people in. But you know, that's what I'm here to educate you. So if you'd like to deal with me, please give me a call. Best way to get me is 844-775-LOAN. That's 844-775-5626. Email me at Danny, DANNY, .Frio, and it's FRIO, at preferredrate.com. Preferred is PREFERRED. And I say that because I had somebody keep trying to email me at PERFERRED, and it didn't go through. That's preferred. I'm preferred. So that's that. My website is thefrioteam.com. It is down right now because we are coming back with a phenomenal system. And this has been in the works for months now, and it's going to come back, and it's going to be one of the most tech-savvy sites that you've ever seen. And we're going to have an app for your phone and be able to do all kind of integration with you that basically puts you in control of your destiny on your mortgage. So if you would, please give me a thumbs up. That helps me out. Share. So go down below and share this video. Last night I posted, what's the Fed doing? And I think we got 1,500 hits in the matter of a couple hours. So thank you out there for helping me there. Hit the bell, especially if you're a realtor, financial planner, in the mortgage business. Every time I post something, you're going to get an alert. Go check it out. It might be really informative to you. And down below in the description area, you can apply for a loan there. You can get your credit reports. It has my email address, my website, everything you need to do to get a hold of me. But that's it. So if I can help you out, God bless you. If you have a mortgage right now, you want to say, Dan, what can you do for me? Send me a copy of your mortgage statement and just give me a little bit of information. Let me know what you think your credit score is and your full address. So I can look up your address, get the value of the property. I can then compare it to the amount of money you owe. Then I need your credit score to figure out exactly what kind of rate I can get for you. And if you're in the middle of a mortgage right now, the lenders are required to give you what's called a loan estimate. That's a breakdown of the loan that you're getting. Please send me all 3 pages. There's 3 pages involved. I need 3 pages. Why? Page 1 gives me your loan amount and your rate. Page 2 gives me your costs. The costs that are coming through the system right now, people, please don't get involved in this. I'm getting you a rate that's 3 1/4. That's a phenomenal rate. Phenomenal. But don't pay $8,000 for it. And I'm seeing it every day. People are there's hidden fees in there that they're not telling you. I can get you a 3 1/4 rate. Look at what this is saving you $400 a month. Well, if you're spending $8,000 from it, we might want to revisit that. So don't be tricked on just the rate alone. Check out the costs and let's compare those and see if you can get better. Normally, probably about 80% of the time, I'm beating rate and terms and costs. Probably 90% of the time, I'm beating them on rate. So reach out to me. I'd love to help. So God bless. Sorry it's so long. I'll cut it here. If you need me, reach out. Otherwise, I'll see you tomorrow, same time, same place. Bye-bye.